So, can art actually beat the market? Yes or no? After reading hundreds of pages of research papers on art investment, we can probably reach a short answer. Yes, it crushes fixed income and almost keeps pace with stocks with less volatility and less correlation with other investable assets. However, there's always a catch. The long answer? It depends on what category of art you buy, when you buy them, where you purchase, and honestly, how lucky or savvy you are. In this video, we draw from the most recent and credible academic research, auction house reports, and insider market data. We'll unpack how's the general performance of art market compared to fixed income and stocks, whether buying a masterpiece generates more return compared to other artworks. Do specialized or interdisciplinary artists yield more returns? And how ultra high net worth collectors generate additional profit from investing in art by taking advantage of tax breaks, leverage, and legacy moves. So, if you have ever wondered whether a Rothko might retire richer than your Roth IRA, buckle up. This is not your average investment video. In terms of the investment return, let's break it down into two parts. First, how art performed as an investment before 2000, and second, what's going on right now in the contemporary market. First stop, the past. According to May and Moses research, in the 130 years leading to 2000, art left bonds in the dust. While it doesn't quite catch up to US stock market, it's close to S&P 500. The insight comes from the landmark study Art as an Investment and Underperformance of Masterpieces, which crunched 4,896 price pairs from Christie's and Sotheby's spanning 1875 to 2000, using advanced econometric methods and numbers. From 1950 to 1999, art returned a real compounded 8.2% annually, nearly matching stocks. During that period, S&P 500's annual return was 8.9% and Dow 9.1%. The interesting finding was that it crushes fixed income. At a time, while art gave you over 8%, corporate bonds yielded 2.2% and treasuries 1.3%. Fast forward to now, the post-pandemic art world is booming. In the last decade, according to Anita Heriot, the art market outperformed Wall Street's golden child, the S&P 500, which averaged an annual return of 8.9%. Even COVID couldn't take it down. While analysts braced for a 22% crash in 2022, the art world staged a surprise comeback in the second half of the year. And guess what? According to researcher Benoit Faye, 2024 smashed records in the contemporary art auction world, hitting the highest number of transactions ever. Yep, while skeptics were busy calling the pre-COVID art market a ticking bubble, the market just kept climbing, kind of like the S&P on a caffeine rush. So how is that possible? Easy. Art isn't just something pretty you hung on a wall anymore. It's basically turned into a new kind of currency. It just is. And for collectors, investors, and even bigger institutions, that's exactly what makes it a dream asset. No rent to collect, no tenants to chase. As more money floods in, the classic supply-demand magic kicks in, and prices, they soar. Wondering what's next? Let's just say, now that art isn't just for walls anymore, it's becoming an attractive diversification option for Wall Street. And with institutions ramping up their research into art as a serious alternative investment, this money meets Monet moment might just be getting started. What if we told you that buying the most expensive painting might actually be the worst move you could make? Forget what the art dealer in velvet loafers told you. According to the study by May and Moses, based on over 4,000 data points, masterpieces underperform the art market index a lot by a factor of approximately 3 to 4. Yes, really. So what's going on? Is the art market playing tricks on us? Here are a few possible explanations. Maybe it's the art world's version of the small firm effect, where cheaper, overlooked works quietly outperform their flashier cousins. Or perhaps it's a case of mean reversion. What goes up in price might come down in returns. And then there is the pleasure tax theory. Maybe the joy of owning a masterpiece is so high, it quietly eats into your financial gains. The takeaway, focus on your goal. If you are a true art lover who's somewhat indifferent to the return, then buy what you like. And of course, masterpiece usually has the best intrinsic value. However, if you're an art collector or investor who hopes to make steady return from picking the good art, then don't blindly chase the million-dollar canvases. Sometimes, the smartest investor is the one bidding quietly in the back, not the one holding the paddle with the flashiest number. So, does being a jack of all trades help or hurt an artist in the art world? That's exactly what Benoit Faye wants to find out. In a deep dive into the creative habits of 945 living artists from 2000 to 2020, Faye explored whether sticking to one style or doubling across disciplines made you more legit and more valuable. The results? Well, jumping between mediums doesn't guarantee higher prices. It does tend to boost artistic credibility. But when it comes to cold hard cash, it really depends on who the artist is and what she's mixing. Some combos work wonders, others not so much. Bottom line, being interdisciplinary might not make an artist worth more overnight, but it generally reinforces artistic legitimacy and hence the value in the long run. Think art is just like any other investable assets: house, gold, businesses, stocks, and even crypto, where you wait for the purchase price to appreciate. Think again. Today, smart collectors are trying many different ways to make art work. You can collateralize artworks and borrow against it to generate liquidity while still keep the art on your wall. You can weave it into wealth planning and enjoy the suitable tax break. And because of its one-of-a-kind quality, you can strategically sell through private deals to maximize returns that's usually unobtainable in public market. And it's not just individuals playing the game. Museums, nonprofits, and institutions are using art to sharpen their financial edge too. From consignment strategies to art-backed loans, they're unlocking hidden value most people never think about. So, these savvy moves can stack profits on top of price appreciation. In today's society, art indeed can be a power play with a frame. Love art? Curious about money? Smash that like button and hit subscribe, because we're diving into the juicy intersection of creativity and cash. From academic deep dives to insider secrets, we'll give you fresh take on how art and money really work, together and apart. Don't miss out.